Okay, welcome to my Patreon. In this Patreon, we're going to learn how to do margin trading together. We're going to crypto trade together. So first, I'm going to explain to you what the basic concept of margin trading is, and then I'm going to give you just three very simple principles for determining how to do it in a way that neither you're not going to lose your shirt and you're also not going to lose your sanity. And that's the key. You know what I find is a lot of people in this space, they don't lose their shirt, but they lose their sanity. And I know I've experienced that. I've gone through that where I'm up all night long and half the night and I'm waking up to pee, but I'm checking the charts because I'm so nervous. The key is if you're nervous about a trade, it's probably not the right trade and you probably didn't put the proper safety around it to keep you safe. The thing about the crypto space is that it is already incredibly volatile. Margin trading makes it even more volatile. Matter of fact, margin trading makes it exponentially more volatile. I mean, just look at this chart in front of us right now. This is XRP USD. These are weekly candles. And if you just go back 1, 2, 3, 4, 5, 6, 7, 8 candles, from 8 candles ago, we were at 27 cents. We exploded up to 90 cents. We dropped down to 17.5 cents, and now we're at 33 cents. That's just in the last 2 months. So that is incredibly volatile. Well, when you add margin or leverage to that, it makes the market exponentially more volatile. Now, what is margin trading? What is leverage trading? Well, it's basically this. If you put $100 into your trading platform and you see that XRP is at 33.64 cents right now, but you got a tip that it's heading up to 39 cents. So you want to capitalize on that 20% burst. So you can buy on Coinbase, let's say, you could just buy $100 worth of XRP at 33.64 cents. Or on some platform that allows leverage trading like Prime XBT, which we're talking about in this Patreon group. But in a platform that allows leverage trading, you could set a $400 trade or an $800 trade or even a $1,000 trade, even though you only have $100. And basically what that means, if you're setting a $400 trade and you've only got a $100 balance, you're borrowing $300 from the platform. So say you borrow that $300, you set that 400 trade at 33 cents, it goes up to 39 cents, you take profit, you made a 20% profit, but you made a 20% profit on $400 instead of $100. You say, well, how does the platform do that and still make money? Well, here's how they still make money. Because if you think it's going up to 39 cents, but it actually goes down to 27 cents, you had a 20% loss times 4. So instead of taking a loss on a $100 trade, you're taking a loss on a $400 trade. So basically, a 4x trade means either a 4x profit or a 4x loss. So if it goes up 20%, you take profit, and 20% of $100 is $20. But 20% of $400 is $80. And so if you take profit at 39 cents, you made $80. You made $80 80% on that first trade, right? But if it goes down 20% and you take a loss, that is now an 80% loss. You lost $80 on your first trade. So you went from $100 to $20 in one trade. Now, going from $100 to $20 in one trade is incredibly painful and incredibly stressful and incredibly devastating. It's more devastating than you can think. If you've never done margin trading, you actually don't understand how devastating that is. And secondly, going from $100 to $180 in one trade is euphoric. It is incredibly euphoric. And if you've never done margin trading, you have no clue how euphoric that is. And so what happens in margin trading is if you don't have the proper set of principles to govern how you do it rightly, you go from euphoria to devastation to euphoria to devastation to euphoria to devastation, and you can almost become mentally ill. You drive yourself into the ground. You've got no peace. You're waking up all through the night to check the charts. You're worried all the time. You're nervous all the time, and you're excited. You're Dr. Jekyll and Mr. Hyde. You're emotionally all over the place. You become addicted to the thing. You get separated from the most important relationships in your life. Your work suffers. You think about nothing but trading and your platform. And you look back after several months of doing this and realize you made almost no profit because every time you made something, you lost. And every time you lost, you tried to fight to get it back, and you made a little bit back, and then you lost again. And you realize if you calculate how much you've made, if you're not doing it rightly, you'll realize that you become a slave to this thing, because a slave is someone who works and makes no profit. And I remember doing that back in the fall of 2017 when I first started to trade. Oh my goodness, I spent probably 80 hours a week reading charts and doing Fibonacci retracements and trying to figure out what the next trade was. And by the end of it, I was down about 76%, 86% from my my total investment into the whole thing. And so, I mean, I had lost a large portion, the large majority of my initial investment. I mean, it was absolutely horrible. So there was a huge learning curve, and I actually had nobody to teach me at the time. I just had to learn on my own. I had to learn from reading and watching videos and asking questions and subscribing to other people and making mistakes and figuring stuff out. And so I want to make it easier for you. I'm here to tell you that you don't have to go through that. Yes, there is going to be a learning curve. There's a learning curve for everybody. You're going to have to learn how to manage your own emotions. You're going to learn how to forsake the possibility of a huger profit in order to maintain your sanity and your peace at certain times. You're going to have to learn how to govern your emotions, and that is going to be a learning curve, and that is going to be a process. However, it doesn't have to be as devastating, as taxing, and as long-term of a project for you as it was for me. And so I'm going to give you some keys for doing this. So number one, first thing, keep in mind, do not trade with large sums of money. Do not trade with large sums of money. If you got a total $2,000 to invest in crypto, do not put all $2,000 into a trading platform. Don't do it. Put $200 or $100 or $300 at the most. But you take the rest of that money and you put it into a long-term investment. You create an investment portfolio, you buy and you hold. But your trading portfolio, where you're going in and out of different markets, that must be, I would say, a small percentage, maybe 10% of your overall investment portfolio. You do not want to lose your entire bag. You do not want to put yourself up to that risk. You will be riddled with anxiety and with shame and with embarrassment if you lose. It's a horrible prospect. So that's number one. Do not see. Here's the thing that you need to understand is that the crypto market is already incredibly volatile, and margin trading makes it exponentially more volatile. And so fear of missing out plus access to leverage is one of the most dangerous combinations that you'll ever encounter. It is incredibly dangerous. And so do not trade with large sums of money. Start with a couple $100s. Why? Because if you do it well, you can turn a couple $100s into a couple $1,000. You can turn a couple $1,000s into $20,000. So if you can do that, why start with more than a couple $100s? If you can do that, if that's possible. But here's the other side. If you only have a couple $100s in there, you can only lose a couple $100. That's the key. Okay? So number one, do not trade with large amounts of money. Number two, do not use high leverage. And so when you get onto these platforms, they're going to give you access to 100x leverage. Prime XBT gives you 100x leverage when you're trading Bitcoin. 100x leverage. Do you know what that means? That means if you put $100 in, it's not just that you can make a $1,000 trade, that's 10x. You can make a $10,000 trade with only $100 on the platform. Now, that might sound exciting, and it's exciting in a sense that if you put in $100 and you make a $10,000 trade and it goes up 1%, every 1% it goes up, you double your money. Why? 1 to 100? Times it by 100. Every percentage times it by 100. If it goes up 2%, you've doubled your money. If it goes up 10%, you've 10x'd your money. You've made 1,000% on that investment. But here's the downside of it. If it goes down 1%, you are completely liquidated. That is, if you make a $10,000 trade on XRP at $33.47 cents, that means if it goes from 33.5 cents to 33.2 cents, you're liquidated. That's how dangerous margin is. So what I'm going to do in this Patreon group is I'm going to give you the principles and the keys for understanding how to set your margin trades in a way that is much, much safer. Now, is it 100% safe? Absolutely not. There's no such thing. And especially in the realm of margin trading, there is a level of risk. What I want to teach you how to do is to minimize that risk so that you can maximize your profit. There's going to be mistakes. There's no such thing as 100% accuracy in your trades. And so in order to hedge yourself, knowing the risks, number one, you're not going to trade with large sums of money. And number two, you're not going to use high leverage. Then number three, always use stop losses. You're always going to use a stop loss. A stop loss is simply a way to prevent yourself from being liquidated. There will be losses. There's no such thing as trading in which there's no losses. But the one thing you can protect yourself from is liquidation. And liquidation is when your entire portfolio is gone. The thing that you must remember is that any loss except a complete loss is surmountable. Even a 90% loss, you can overcome it. You can come back from a 90% loss. I've done it before. I've gone all the way down to about $176 and then gone back up to $16,000 in just a couple of weeks in my trading platform. I've done it. And I've lost $15 or $16 or $17 or even $18,000 in one day on my trading platform, just making foolish trades. I've done both. It's possible. But the one loss that is not surmountable is a 100% loss. And so stop losses prevent you from having a 100% loss. They set you up to get regrounded, to come back to your center so that you can begin making sane trades and safer trades again. Okay? So keep those three things in mind. Number one, do not trade with large amounts of money. Start with $100, $200, $300 at the most. I mean, if you have a lot of money, maybe you could start with $500, but don't start with large sums of money. Number two, do not use high leverage. I'm going to teach you how to build a foundation for your leverage trades so that as you build profit, you also build leverage. You build your ability to use leverage. We're going to use leverage, absolutely. If we weren't going to use leverage, we wouldn't be in this market. But we're going to use it in a way that minimizes your risks, maximizes your gains, okay? Your potential for gains. All right. And then thirdly, always use stop losses. And also in this group, we're going to talk a lot about how to use stop losses, where to set your stop losses, what the dangers are, what the risks are, and how to protect ourselves from those risks. If we keep these three things in mind, they become a foundation for building a healthy philosophy of margin trading. And this is the perfect time to do it. The bull run is upon us. Let's be expedient, but at the same time patient. Let's move swiftly and slowly simultaneously. And let's maximize. Let's get everything out of this market that we possibly can. All right? Cryptogenic signing out. Many blessings and much love to you all.